index that moves the major currencies. And in fact, it's a major currency itself because everything that is attached with the US dollar, it it's a major currency. So if the dollar is buying, like I always say, expect uh, any currency that is on the base, let's say GBP USD, to be selling if dollar is buying. So right now, let's just dive into the analysis. Let's go to the weekly time frame. I think I made this analysis last week that I'll be anticipating dollar index to take out these highs, and we still have this one that we expect it to still push more to it, because if you can see here, what we have is that price took out this liquidity here. This was a liquidity grab because after price took it out, what you can notice is that price broke a major structure. So coming back here is to come and mitigate this other block, and at the same time another liquidity was taken out. So we anticipate price to clear these highs before we see maybe a major pullback to the downside. All right, so now on the weekly we are still very bullish. On the daily we are also still very, very bullish. But if you can see what is going on here, you discover that you have taken out these equal highs, taken out these other highs also. So we'll be looking at this down close candle that we have on the daily time frame to see if price is going to push down to this area, because like I do say, each time we have a bullish move, anticipate the down close candles to support price to the upside. If you have a bearish move, anticipate an up close candle to support price to that direction. All right, so now on the daily time frame, if you can see what is going on here, after we took out this major high, price just came back to it, and this was a retracement. Price is just on top of it. So I can't call this a liquidity sweep, but we have taken a why, because price has broken above and is staying above it. Look at this. The candle is just, we break above and we are now on top of it. We did not come back inside. But if we see a move below this high here, we close below this this line that I drew. Once we see a close below it on this daily time frame, then we anticipate that price is going to retest it and come down to this point. So now let's go down to the 4 hours and see what we have. Let's look at the structure, the market structure on the 4 hours time frame. All right. Like I said, after we ran out this first high, you can see price pull up, came back to it. So this is a down close candle that is supporting bullish move. That's why this buy you are seeing here, when we go to the when we go to GBP USD and Euro USD, you'll be seeing that we are having a sales on them. Why? Because we broke out. This is not a liquidity grab. Why? Because price is staying above the high that was grabbed as liquidity. So now price just came back to it, a retest, the down close candle. So this is our break of structure on 4 hours. This is our 4 hour structure now. So what do we anticipate next? Take note, if this low is violated, we anticipate a bearish move. Take note. So what do we do? This is what I'm looking at. If you have something like this, now that price has already mitigated, okay, let me show you guys something. Now if you look at this, when price also break above the second liquidity high, or the second high that was here, let's shift back. The second high that was here, that's relatively equal highs. When price took it out, what did price do? Price reacts. Price was still on top of it. Now as at yesterday, or is it okay, as at Monday, yes, price did what? Price violated, price came back inside. Look at this, price came back inside it. So now the up close candle that did what? That caused that expansion. Price did what? Price just came back and retested this morning. So now, okay. So now what we'll be looking out for is to see if price is going to still come back and respect this low, which I know that is to watch out for watch out on this zone, because if price should do this, react here, come back and fail this low. If it fails that low, then anticipate price to pull back in here and we sell it to this daily order block here. So this is what we'll be anticipating. Why? Because this is a strong low. This low took out liquidity before the broke structure. So if price should violate, already the low has been mitigated here, and we pull back and also mitigate this one. So once price value this low, expect a retest to that this up close candle that will cause the violation, then to the downside, then expect price to retest it and we take a shot down to this point, to the daily order block that we have here. So for now, we are still, let's say, bullish on dollar index till we see a violation of this order block here, this strong order block, this strong zone. So just watch price and see if you are going to have a fail order block here, a failure of this low. So once this low has been violated, then anticipate price to pull back here, then we take a shot to this point. So if we are anticipating a bearish move once price violate this low, so what do we expect GU and EU to do? They should be buying. All right, so that's for the dollar index. So let's get to GBP USD and see the analysis for it. All right, so same thing on GBP USD. Let me go to the daily time frame. Okay. All right, so on GBP USD, if you can see what we have here, I think this is a weekly time frame. Okay, this is a weekly time frame. So we just took out this low. This is a major low. I've taken out this major low on the weekly time frame. And what do we anticipate? We are anticipating a reversal. Like I told you guys, I think the last time, that each time a low is taken out, expect a reversal. Don't always sell when a low is taken out, nor buy when a high is taken out. Instead, if price is going to continue after breaking this low, this is what you're going to see. I'm giving you guys a little expo. When you go back and study it, if price is going to violate this low, or it's going to continue after breaking this low, this is what you see. It will first of all react. After the reaction, what will happen? It will violate. Once it is violate, anticipate price to pull back to the point that violated the low, the other block that violated the low, and do what? Continue again to the downside. So, but if price is going to respect it, what you anticipate is that you see price just come, react on it, go back up, break maybe the last order block, the last bearish order block that was there, and that will give us a market structure shift to the upside. So from there, anticipate price to come back and retest then you buy it back up. Then, but if price is taking it out as liquidity like this, what do you also want to see? Once price take it out as liquidity, you want to see price push back inside immediately. You shouldn't waste time. You should push back inside immediately and also violate the last high that was there. That's the last order block that was there. So what do you want to see? You want to see it if, for instance, let me show you what I mean. If, for instance, this is the low and we had something like this, I'm going to go to the lower time frame so that I'll show you an example. We had something like this. Now price get to the low. This is our liquidity point. What do you want to see? If this point is going to be the liquidity point, then price should do this, go up, then take it out. Once price take the low out, you shouldn't waste time. You should do what? You should pull back in, then violate this last high here. two things can happen. It's either it will react first, then break, then you can now buy from here to continue, or it will do what? It will come back, it will just react. After the reaction, hold on, it will just react, then it sometimes it will not react, it will just break the last high and do what? Come back and retest. Come back and retest the other block, then buy. Continue the buy. So this is what you see. So always make sure that the last, some people call it demand or supply zone, is validated before you take a trade. All right, so let's go down to the daily time frame. But as you can see here now, this is not a break of structure for me, because if you look at, we have a week. This week just took out this low. So this is a liquidity graph for me. Let me mark this point well. That's a liquidity graph for me. So the next thing I'll be looking at for is structure to confirm that direction. That's weekly time frame. So now on the daily time frame, what I can see here is that price just, let's say it's moving sideways. I'm just having 2 or 3 candles there. Then we'll drop down to our structural time frame, which is the 4 hours. Like I said the last time in our advanced class, if you want to be a day trader, you can be using 4 hours for your structure. 4 hour, 1 hour. So that is where you always get a nice structure to know which of the demand or order block to buy from or sell from. So now currently, that sell that the buy that you saw on dollar index is what affects this sell on GBP USD. Now this week, this candle week you are seeing took our previous candle high before the break of structure here. And let me show you what I mean. You look at this. This is our last low that was taken out, and these are our last supply. If I go to 1 hour, I think, look at what you have here. Have you seen? That's our last supply there that broke structure to the downside. So price just pulled back there and sold to the downside. So currently, since we are looking for a bearish move for dollar index, then we anticipate that as we have taken out this low, we broke short-term high here, let's say internal high, we came back, mitigated, we bought to this bearish order block or supply zone. So now what we anticipate is that already I think price has taken out this low here. Okay, it has not taken it out. The low is still intact. Price hasn't taken it out. We need obvious liquidity graph. So now, if price should also take this low out and give us a bullish move, we can still buy, take a buy to this point and exit our trade. Why? Because dollar index is still bullish. So until dollar index breaks the low that I showed you, let's go back to it. Until dollar index breaks this low, this demand zone that we have here on 4 hours. Till dollar index breaks this demand zone on 4 hours and start selling, that is when we anticipate GBP USD to also violate this supply zone. So if this supply zone is violated, then what we anticipate is price should do what? Let's go to 4 hour time frame. Price violate that supply zone, then you expect something like this, or we anticipate something like this. If price should pull back, let's say price should do this, violate the high, that I can react a little bit, let's say react a little, then violate it. Once it's violated, you can use your 4 hour time frame, wait for price to pull back here, then you take a buy to continue higher. Maybe target this other highs, or you target the imbalance that is there, or just target the recent high that was created here. So, but for now that dollar index is still showing willingness to buy, or is not, or it hasn't taken out the demand zone that we anticipate, then we are still bearish on GBP USD. All right, so let's look at Euro USD also. All right, let's look at Euro USD. So, all right, let's go to the daily time frame or weekly. Start with the weekly time frame. All right. Okay, so look at this. I think let me put out this one. If you look at this, you can see that on the euro dollar, we have this low that has been taken out. Then we have this last down close candle that price is reacting to. Last this whole zone itself is our order block. Alright, so why did I mark the whole of that zone? You can check that's the zone that grabbed liquidity. That's the zone that took out this low. Took out this low here. Before we had expansion to the upside. So let me take this out. So now let's go down to the daily time frame. Alright, on the daily time frame, if you recall what I said earlier on, each time you don't want to see a downward move to the downside. If it is liquidity grab, price should just take it out and do what? Close back inside. Price shouldn't close outside it. Can you see what is going on? So this is not a liquidity grab. This is a clear break of structure to the downside. And as you can see, you see how price came back and retest it, then sell. So this small sell you are seeing today is as a result of the retest. So take note of this. It's very, very important. Now let's look at where price reacts to. Now if you check, we have another swing low here on the daily time frame. So let's see how price react there. All right. So this I can comfortably tell you that this is also this is a liquidity grab and not a break of structure. So what do we now do? We'll move down to the structural time frame. Now on the 4 hours, you can see that after price took out this low, we had an impulsive move to the upside. Price just came back, retested it, and bought to the upside. Now this is also our up close candle. Let's call it a supply zone or a bearish order block. Now what do you see price? Now price pull back there due to the fact that dollar index is still bullish. That was why euro dollar sold. And like I said earlier on, any reaction, once the price break below a swing, a liquidity level, or a swing low or swing high, and refuse to go back inside immediately, then anticipate that place to be what? A break of structure. So this was a break of structure and not liquidity grab. This one is a liquidity grab because price just pull back immediately. The price did not close below it and continue the sales. So now currently, or if you were on your chart, you would have taken these shots here. So now let's go to the 1 hour time frame and look at it. All right. So if you can see, that's exactly what happened. I can see exactly the point that the low that price took out as liquidity. That's where price came back immediately and tap on it. And if you wanted to take a sell here, a confirmation sell, like me, I like using confirmation. This is what you would have done. This previous day high. Look at what happened also. Price just took it out. After taking the previous day high out, then what do? Wait for your last demand or supply to be violated. Your last demand to be violated. Have a low high, a higher low. You fail to make a higher high. So what happened? You still came back. Okay, we took out this low a little bit, pull back up again, still failed to make another higher high. But what did price do? Price took out a high, short-term high, and did what? Violated the last demand that we had here. This was that popular or most recent demand that was in control. So immediately price violated that demand. What happened? Just look at the last supply that caused that violation. Like I showed you guys on dollar index. This is the last supply that caused the violation of that demand. So automatically, that will be your entry point for short. Just sell there, and your stop loss will be above the high. Give it a space and let your trade run. I've broken down everything for you guys. So this you would have gotten this sell move. All right. So that's that for dollar index and euro USD for today. So, but anticipate that if also this high is violated on euro, then we expect some more bullish move to the upside. Let's say to clear this high. But if euro fail to violate this high, as dollar is failing to violate its own low, then it might still continue. If you break this low, it might still continue to go down. But if you violate this up close candle here, sorry, this down close, yeah, this up close candle here, which is the bearish order block, then anticipate price to pull up more, to push up more. So that is that for the major currency pair. And let me just look at maybe one other minor pair that we have here. All right, so let's look at GBP JPY. All right, GBP JPY is also on a bearish trend, but let's go to the weekly time frame. This is one of my favorite pair. All right, so as you can see on the the weekly time frame, GJ has been selling for the past week. This last week. Last week we had a massive sell to the downside. So this week price is still looking bearish. So the only point I might anticipate a reversal if when price comes to this down close candle here, this other block here. All right, so for now let's go to the daily and see what is going on. All right, as you can see on the daily time frame, we are still looking very bearish. Everything is bearish, so I will look at a buy from here. Why? Because this is the most recent, or this is the low that caused the major break of structure to the upside. This is the low that caused this major break of structure to the upside. So I can see this might be a break of structure. So I will look forward to see price come down to this level. Then this will be my liquidity. I'm waiting for it to take out. So now if you go to the 4-hour time frame, you want to take this trade, you want to continue with the bearish trade down to this level, what you just do is, already as you can see here, this is what we have. We have this low that has been taken out before we had the major market structure shift. So if you want to take a trade, I'm still bearish on this pair, and if you can see the same analysis, almost the same concept I showed you on the dollar index, this is where price is reacting to, or this is where price reacted to, or reacted from. And what do you see? This order block caused the break of structure to the upside, and we just reacted and failed. So what do you anticipate? Price should use the one that caused the failure to short. So this is what I will anticipate price to do. Then we take the sell down to this level, to that level. But don't forget your first TP can maybe be this low, just target 1:2 around this area. Then allow the rest to run. So that's what I anticipate for GBP JPY. So these are just the trade analysis I have for this week and the pair I'm looking out. I have other pairs, but for now we won't go that much because we don't have a lot of time. So I would love to know if you have any question. Because I'm going to hold on here and let me listen to you guys, whether you have any question or you have any challenge you want to share. So you can unmute yourself and speak. I want to hear from you guys. So is there any question?
Boss, this is Jason.
All right, all right.
On the higher time frame, that's the weekly and the daily.
Okay.
How do you exactly predict the possible direction of the present candle? For example, if last week candle closes as a bullish or a bearish, how do
Okay.
you this week's candle movement?
All right. That's a beautiful question. All right. Let's go to the weekly time frame. Let me show you how you do that. Now, first of all, like I said, you need to know. If you look at the weekly candle, how it closes, it also tells you a lot of information. Like for instance, if I look at this candle, this is how. Let's anticipate, and let's say this candle didn't form yet. This particular one, this is the one that formed, and I saw that this particular one closed bearish. We just tap into an imbalance on this higher time frame, and also this is a breaker block. That's a breaker block. So I know that definitely prices reject this particular area. So the next thing I'll be looking for is structure. The structure aligning to the bearish move that I am anticipating to happen next week. Let's say, for example, this particular week is the week that we are going to experience this expansion. So, and I saw this week close like this. What will I do? I'll just go to my 4 hours. Okay, before I go to 4 hours, let me mark that week out. Let's say this is the week we are expecting this massive expansion. So now then this is the previous week that we are in. Let me change the color of that one. All right. So now I'll go to 4R and I'll look at the structure. Structure tells a lot. Structure will give you a clear and proper information of where the market is heading to after the liquidity has been taken out. So now, what will I do? Now, this was that previous week that closed bearish. I'll look at the structure. When you come into the mentorship, maybe by next year, you are going to have a very better, clear understanding of the liquidity concept. Now, this is my last demand. There's a reason why price react here and buy, and we violated a lot of demand zone here. So where is the last candle that violates? This is our last demand. Let me use this one. This is our last demand. I've shown you this concept on dollar index. I'm showing it to you here again. So take note and go back to your chart and study it. It's something that works all the time. Now, if you look at this is my last demand zone that caused the break of structure. This is my last break of structure to the upside. Price came back, reacted, and what happened? Failed. Even right from this first failure that we had here, price retested it here before it sold down. Now, once you see this, the first thing that should come into your mind is the candle that reacted before the violation. Where is the candle? This bullish candle here. That will be your point of interest. So now, price went back there, reacted, and sold back down. Selling down, we also have a lot of demand zone, internal demand zone that was violated here. So if I should check that out, then combining it with market structure, like I said, automatically from here, for me, from here, my trend has changed from bullish to bearish because you're not supposed to violate my last strong low. This is my last strong low. I have a reason for calling it that. When we get to the advanced or mentorship session, I'm going to explain why this low shouldn't be violated. But once price violated, just know that that's a change of market structure, or sorry, that's a change of trend. So now, what else am I going to be looking at? I'll be looking at sales. Once price comes back there I'm selling. So now this is my next point of interest I will be looking out for buys. Now I know that this low, if this low should also violate this high, which I need to violate. Why? Because I already have a bearish structure that has been violated here. So I'll be looking at the structure inside here. So what did I have? My last internal demand here was also violated here. And what do we have here? We have a bearish order block. Look at it here. We have a bearish order block here. Although price did not tap into it very well, because that was the order block that reacted to this demand before it fails. So what else can I see here? Now this is where I break it down to my lower time frame, which is the 1 hour or the 30-minute. Take note of that area. I have what? I have a sweep of liquidity here, and this is the low that the price is not also supposed to violate. Why? Because if this low is coming from this demand zone that took this buy to this place, this low shouldn't be violated because it's not a strong low. What did price do? Price violated it here. So automatically, I'm not looking for buys. I'm looking forward for what? Sells from this area, because this is where my last supply stopped on the 4 hours. You can see if I expand it, look at it here. That's where my last supply stopped. So everything that is inside here, they're all internal liquidity for me. Everything here is internal liquidity. So only wait for price here to shut it down. Like I said, this was my last break of structure to the upside. Look at how it's going. This is my last break of structure to the upside. We reacted and we violate. Immediately we violate, what happened? Price pull back, mitigate, then drop and break this low again. So where do we anticipate for sales? The extreme that started the move. And what happened? That's why we had this massive sell. So just combine everything with your structure coming down from your higher time frame. Then that is when you will know that the trend is not going to be bullish. So like this, like I said earlier on, this is my last supply zone. I'll be looking for sales once price pull back to this area, because I know that already my structure has been violated. Major structure has been violated here. So pulling back here is just to come and mitigate this high and come back and break this low. Why is it breaking this low? Because this is the move, the low that started this move to this point. And from here to here is just our first leg of expansion. So this pullback is just to mitigate and give us another expansion to clear the low. So if we should pull back in here and react on this last demand and failed, then price should also pull back, mitigate, and do what? Continue the drop to the downside. So that's how to know if the trend is going to continue in that direction. That's the first thing is, like I said, don't forget this. The first thing is, if you identify that weekly candle and you know that the weekly candle just closed bearish, go to your 4 hours and identify the last demand that is responsible for, let's say, the break of structure to the downside. Let me show you another example. Let me look at another pair that looks very clean. Which pair? Okay, let me look at Euro CHF and see if you're gonna see anything here. Okay. Oh no, let me use GBP CHF. Now on GBP CHF, let me use the example here. Look at this. If I go to the weekly time frame, sometimes I don't even look at the weekly time frame, but I know where price is going using the structure on the 4 hours. So most of the times, if you understand structure very well, you won't be wondering where price is going to. But it's also good to look at your higher time frame for a clearer picture. Now, if you look at this, we had look at this. After we have this massive break of structure to the upside, this is weekly. Price break the structure. This is also at my last demand zone that caused that caused this break. So price came back, bounce on it, pull back up, failed to break another structure. As it fails to break another structure, what did price do? Price violated it. And where did price come back to? That same place. Have you seen that? Price just came back there. Let me go to the daily time frame so that I can and order. This is what you see. So that's my point of interest. So if that's my point of interest, point of interest on the daily time frame, what will I do on my 4 hours? If price should get there, then I should see my last demand on 4 hours being violated before I start looking for sales. And what is that? What can you see here? I'm breaking down, doing a very thorough top-down analysis for you guys today. Now, see our last break of structure to the upside. This is a demand that costs, that led to the break of structure. Price came back, reacted, and what happened? Failed. So if price should fail that demand, where is your order block for sale? This up close candle, that's supply. So anything on top of that high is liquidity. And where do you see price come back to? Have you seen it? So that's how you trade. You just want to be taking your trade from there and you shut it down. So all these things that you are seeing is internal. Me, I know how to trade this. Like I said, when you come into the mentorship platform, that's when you're going to explain and break it down bit by bit for you how you can get set up on each of these moves and why you should also buy from here. So it's just something you need to take your time and study. So that's how to anticipate a bearish move. Wait for your last demand or supply to get violated. Once price get to your higher time frame point of interest, then you can scale in or go down to the lower time frame and get a confirmation to trade. So I think I've answered your question, Mr. Jason Seed. I think you're the one that has the question.
Yes, I was the one. Thank you very much.
Okay, I hope you understand.
I have an idea, but I believe it's something I'll have to keep practicing so I would see it fully.
Okay. So just go back and just try to study it, put it on your chat. If you have any issue, just post it on the discussion group and ask the question. We can still answer it from there. But I hope it's very clear now. You understand what is going on. All right. So I don't know who next have another question. Who have another question? Anybody with another question can ask.